JP Mercer will be joining us soon. Costa bar is low. Yes. I don't know why that is. It is moving up. It has moved up just a little bit. Not as significantly as I was hoping it would. Like, if you see back here, when we moved from 80% utilization up here, there was a bit of a lag with it moving up. But I think it should be higher than it is right now with the utilization so high. So I don't know. The whole thing is a little strange, and it's a little suspicious just overall.
I don't mean like that ORTEX is giving inaccurate data. I'm saying that ORTEX tries to get this live data, but it's called from a variety of sources, and not all of them report to ORTEX. So I think there is some discontinuity there, but I do think this is probably close to an accurate number in terms of utilization, and I do think this is close to an accurate number in terms of short interest percentage. Right now, I don't know what to say about the I don't know. I don't want to comment on it without having some kind of. I feel this is one of those things where we're going. Hold on a second here. Hello, can you hear me?
Hey!
Yeah, there you go. Are we doing your webcam or no?
Dude, last time I tried to do that, it was just only a mess. So I'm almost thinking we lean towards just letting people figure out that it's two people talking.
Yeah, that's fine. We can do that. And I want to move this over here. I need to better align this thing on the ceiling. But we'll get to that. How are you doing today, my friend?
Doing very well. I had some awesome trades. I haven't been trading very heavily since it's just such a mess everywhere.
It has been a mess, yes.
So I only spent like less than $2,000 today, but I almost doubled it. And
very nice.
Trading pretty safely. I mean, I guess the first trade kind of sucked. I spent $500 and brought home 20, but that's what stop losses will do, right? If you
of course
keep a green trade green, you're not going to complain. But second entry went 700% on some of the runners.
Excellent. What was the 700%er?
Spy put.
Yeah, that makes sense.
Like, yeah, that'll do it.
Jeez. What a nasty fall. I mean, look, just a little taste of potential World War III, and people panic. What's up with that?
Right. And in all reality, that's the exact opposite of what you should be doing. War would be.
Oh, Lockheed Martin went up. Lockheed Martin hit a new 52-week high for their stock. I'm not participating in that one.
2 weeks ago, my dad was like, "Hey, I'm gonna buy a couple $100,000 of Lockheed Martin." And I was like, really, why? And he was like, well, the markets are getting a little crazy. It's low beta, high dividend, and if there's a conflict, it'll rocket. And I was like, oh, that's a great idea. And, like, I did not.
It was a great idea.
I did not pull the trigger.
Thank you for subscribing, Eduardo. I appreciate that. Let me see if I can change the filter on this a little bit so it's a little less, turn this up a little bit. Can I get a little bit more? Is this no, I think I'm good. Okay. Well, my right shoulder is disappearing a little bit, but it's fine. I'll just be a mysterious ghost figure of the stock market. So I did get an entry a little bit early, I think, in BBIG, but it was a small entry, and I have a lot of time value on it. $4 calls is what I'm looking at out towards April 14th, and $5 calls to July, because BBIG has this. It's such a strange chart, wouldn't you say?
I pulled up a 30-minute here. And it's definitely in like a bearish looking bear flag, but it's also a rising. Yeah, it almost looks a little bearish from here to me.
It does look a little bearish, I agree. I'm sort of just going to be adding a bit of a position here. It could drop back down. I could see it retesting $2.96 or $3. I do have a stop loss on them. I entered just a small position, just as a test the water type of thing in case things start to move next week in a way that's unexpected, which it very well might. It doesn't. One thing I will say is that as price has been declining, at least on the 10-minute volume has been declining as well. So I'm a little encouraged by that, at least.
Yeah, and look at the channel. Look at the channel it's trading in. It's actually held the same bullish trend line since before its initial takeoff.
Yes.
Which is that 2.1 trend, which we might test again sometime next week, around 3.1 all the way up to 3.25 by the end of the week.
Yes.
And that would make a lot of sense to me.
Yeah, absolutely. So I think it's not a bad time for an entry. I just
The
it was
micro
more just
looks
sort of like
yeah, at the very least, it looks like from the micro standpoint, you could trade calls from the bottom of this channel to the top, even if it is a bear flag or a rising wedge, right? Which are
100%.
Which
Yes,
are both bear.
yes.
You're entering on the bullish side of this, so I mean that's a very relatively safe setup for a 3 to 4 month play.
I agree, absolutely. And I don't have I don't have high conviction in BBIG, other than I know there's going to be more squeezing happening. I mean, BBIG compared to like has been at, it doesn't have the same type of crazy retail support. Who knows what BBIG is really? It's just a squeeze play. It's not it doesn't have like the storied history of AMC, but the cost to borrow is 283%. It's been at 100% utilization forever, like basically on and off since July 30th, but it does have these sudden spurting like squeeze moments. The squeezes are getting less intensive over time, so that could mean a couple of things. One, shorts are just doubling down. They're like, no, this is a shit company. We shouldn't be holding on to this. It makes no sense. Other side of that could be that there's other side of that could be that they're just hoping that the merger deal has an SPRT type falling apart type situation rather than what happened. But if you look at the average age on loan, here it's on my chart here, it's just gone up over time. Like it's the average age of shorts is 51 days on BBIG, which would put it here.
I have no idea. Yeah, anyone
Let's
who's
see.
not understanding what John's saying here, just jump over to his stream, just because I don't have the same data sets pulled out.
Can I check the ORTEX BBIG? There it is for you. As for, what did someone say? John, do you think we will hit all-time highs ever again on AMC? Look, I feel the marketplace conditions obviously have changed a lot since that happened. And the circumstances under which that happened could repeat themselves. We could get another gamma squeeze, but it's going to require a couple of different things. So, Mark, why don't you talk a little bit about, from your perspective, like a gamma squeeze, what we need to have that happen, how that happened in June. We could just sort of go back and forth with it. But let's just start with your thoughts on that.
So, today I kind of did a cool little live lesson about volatility. And the cool thing about volatility is that it stays the same for everything. So regardless if you're trading a scalp on an option or if you're trading a swing or a leaps, you always want to enter an option when it's low IV and sell it when it's high. It doesn't matter if it's a put or a call. And what I'm going to stem into this is AMC itself has had this huge problem since their run to 70, where the Vega was so sensitive that that people weren't holding their options. So in order to have a gamma squeeze happen, you need enough buying pressure to drive the stock up and start putting these calls into the money. Now the market makers, when that happens, will have to start delta hedging. But here's the issue. When Vega's this high and people are buying, 100% out of the money calls, they're not ever holding them because those calls are going 200, 300%, right? So they're taking profits and never letting them enter into the money. So all of that gamma pressure is immediately mitigated. Now, that sucked for us when we're trading at 36, above where institutions will enter.
Yes.
And because that means that there's no backup buying pressure from the institutions, and because people aren't holding the calls, that the market makers don't have to delta hedge because they're getting sold, right? So that leads to, hey, this is a seller's market. All of this is an option seller's market. IV's high, we don't have institutional support, and we're just falling through supports like it's nothing. So yeah, right, like that kind of sucked if you're trading calls this whole time. But we're seeing this pivotal shift. Don't get me wrong, the IV didn't come back down. The difference is we're starting to see institutions step in and take AMC at these levels. So it'll still be hard to get the Vega into a spot where you actually see most of the options chain run into the money. So I'm not sure whether we see an actual full breakout past the 72.62. But I am pretty confident that we'll see a push to at least the 50s, and that would and that would be a solid trade if you're in options. That's a couple 1,000%.
Absolutely, absolutely, and I think like for me, I definitely see that happening. As to all-time highs, look, people want the moon on this, and if people, I even said this, I've said this for a while now. I didn't imagine people would get rich off of just holding stock unless they invested a really large amount early on. If they were just holding pure stock with AMC, depending on what they considered rich, you know, $500,000 seems good, or something like that. Even a couple 100,000 is a lot for most people. But you could, if you are smart and you know what you're doing and you have conviction and you believe what's going on with this, like I did last year, you could take 10 grand and turn that into a few $100,000. If you are patient, if you play the game correctly, if you play the levels correctly, which I'm trying to do again this year with my conviction of what's going on with AMC, absolutely, you could get a few $100,000 out of this from a much smaller investment, because you could, you know, I am still buying shares, but and the 70-30 thing, but the options are what's going to make me the most money ultimately. The shares are more of sort of a monetary backup system, and also to help drive pressure in the stock for me. But the most money is going to come from options bets. That's just the way it goes. So, but you don't want to enter into options unless you're comfortable with them. There's on my Twitter, there's in the pinned post, there's an options trading video. It's long, but it's worthwhile to look into. And you can also just look at the trades I'm doing. Don't just take things blindly, because I fuck up like everybody else. And especially with swing trades, you know, with JP's personal, the way he likes to trade, it's intraday. He very rarely swings. I think he's going to join me on a couple of these for this one, but he very rarely takes swing trades. Whereas with me, I love swing trades because it's a lot less stressful for me. It's more stressful for him to hold overnight, whereas it's less stressful for me to hold overnight. So that's kind of like the differentiation between us. But I think there's a good reason that Trey entered $100,000. I don't know if he just did pure shares, I don't remember, but there's a good reason he did $100,000 at around these levels here. I think it was when his video came out, when it was around like 15, 14. But do you see, because my friend Quentin was on yesterday, and he keeps saying, and there's others who keep saying, we're going to see more downside down, way all the way down here to 13 to 12. Do you see that in the cards?
Is that a question to me?
Yeah, that's to you.
Sorry, I was trying to figure out if my stream was even live. I'm really bad at this stuff still.
That's
yes,
okay.
Yes, I do think that's in the cards still. I think that more than likely we'll see push down to at least a 16.5 range, which is, if you're looking at my chart, where you're going to see like the 4-hour support and resistance levels.
Right.
And the reason that I'm saying I think it's in the cards is just because the IV is a little bit high and it's wave 1, meaning we're leaving this bearish market. So you're going to see some deep retracements until the bulls get more confidence, right? The bears have been, I mean, they're up like fucking 400% if they shorted, right? Like, and that's on the stock, right? Like, they have a lot of confidence.
Yeah, of course they do. Of course they do.
So people are going to short these rips. And what I'm seeing with the utilization being at 100% isn't that big of a deal, because the days to cover is only at 1, right? Well,
I think for AMC, actually, the days to cover is at, what do we have it right now? It is at 2.5, actually.
Good.
Not amazing, but definitely higher. GME's is actually higher, I think. GME's is like 6? Let me see.
Which is great.
GME's is at 6.33. It's actually gone up 15% almost in the past 7 days.
Yeah, that's huge. And for anyone who doesn't know, that means how long would it take if all the short sellers had to buy their shares to do that with the current volume average that the stock is seeing? So it would take on average 6.3 days to do all of the shorts covered for game.
Right.
And so the more the days to cover is, the better, the stronger the squeeze will be. AMC, unfortunately, even though we're at the 100% utilization, I don't think that means we stop seeing short sellers. In fact, I think that we'll see more. It almost adds to the bearish thesis. It's like, holy shit, look at how many people are shorting this. And
yes,
because we're coming from this takeoff spot at 13, 4, right? I think that it's very likely that the big buyers who see this push up from 13 to 20, they're going to want to take that same trade. So why would they step in here if there's this many shorts shorting the stock? Why would big buyers step in here when they can just stand away for a couple days, let the short sellers drive it down, and then squeeze them higher? And that's kind of what I would say. Yes, I could see us going down to that 13.5 range. But my first entry zone's at the 16.5 range. If we pull back to 16.5, then I'm starting to look for bullish confirmations. As soon as I see a bullish confirmation, I'll start taking the same calls John's taking.
Right. I think my first entry was the June 20s when it was 15.4. That was a good entry. That was a nice entry.
Oh, it was beautiful.
It was a great entry.
Yeah.
When I messaged you, I was just like, I think it's time. And then it's like the next day, I was just like, oh, there it goes.
Right. That one hurt. That one hurt me a little. I was like, damn.
It's okay. I mean, it happens. I'm not even sure what this, because this looks like a flag. Like I made it on my screen like a flag, but it's not exactly, and it kind of fell through the bottom of it. So it does look like more of a bearish pattern. It doesn't look like, I don't know what kind of a bearish pattern. It just looks like something.
It looks like a bottom is coming in.
Yeah, it definitely looks like a bottom is coming in. We're trading in this little, I made this little box here, this little zone, which seems to be, so one of the things I was paying attention to was the options bets that have been coming in for AMC. And in fact, let me check the flow today for AMC. I was checking it earlier, but let's see. So let me look at out the money only, and let's see what has come in for that today. So 286,000 for a $18 put for March. But also a $30 call for March 18th. So maybe someone buying. Yeah, they bought at different times. Maybe someone hedging their bets. I'm not sure. There's sort of a mixed bag. I think that it's basically like split down the middle in terms of calls versus puts right now. So I don't know if there's a strong sentiment here. I am seeing
your normal amount of put to call ratio for the day. So the average is one put to every 2 calls. And today that's actually very bullish because most of the market, if you look at like SPY, it's probably going to have a 2-to-1 put to call ratio, not a 1-to-2. If I go all the way down to SPY here, I'm seeing it's exactly what I said. It's almost 2 puts for every 1 call. So with AMC actually trading the normal ratio, that's actually extra bullish, which makes sense, right? AMC's staying green when the market's down 2%. That's huge. I didn't even realize how green AMC was, or that AMC was still green.
No. AMC is definitely still green. I believe
not by much, but it's still there.
Not by much, but it's holding on. It's holding on. Let's see here. It's like right on the edge. It's like right on the edge here, but it is still holding on. We might. I mean, again, Max Payne's 18.
Amazing. Right.
That's still amazing that it's held up, especially with the market conditions being what they are. Did BBIG get a little bit of a? I'm not confident in that. But it. So I think that there's. What's interesting is that around these levels, or actually slightly below these levels, like right when price was around like 18-ish or something like that. That's when I saw a lot of these buys come in for April $50 calls or April $40 calls and May, or was it? I think they were both 50s. I think it was April 50s and May $50 calls for AMC. Something like $2 million or something close to it, or I think 600,000 was spent on the May calls for 50, and another 400,000 or something was spent on the. I'd have to check, but it might have been 6 and 6 actually. So like over $1 million spent between those calls, which is a relatively significant bet for something so far out of the money and relatively close. Not like super close, but relatively close.
Yeah, I would agree with that. John, I pulled up the option that you're trading, the June $20 call.
Yes.
And I wanted to ask you something. So obviously, most of my trading comes around Elliott wave theory and then implied volatility and the options skews.
Yes.
But honestly, I just can't stress enough like how important the relative volatility is on these options. And what I wanted to ask you was, you got this 2.8 or what was it, $3 entry, 2.6?
2.7, I think, was what it was. Yeah.
Did you know that you were in the oversold side of the IV side, relative volatility there? Because honestly, it 2.44 was the low, and it was trading, on the low volatility spot, and then it ran to 6, right? And that's in 5 trading sessions.
Yes.
And that was the trade you took. So I just kind of wanted to know, like, was there anything related to that on why you entered there? And then,
Why I entered at that price point?
Yeah.
Well, I was already looking at AMC on Monday, and sometimes when it comes to like entry points, when I saw what it was doing on Tuesday morning, even though it had a little bit of a run up, it went from, let's see, on Tuesday it was kind of hovering around there. I could have got a better entry when it was like at 1481, but I wasn't sure if it had more downside to it. But when it had that nice little move up to 830, I decided to get an entry there. I don't know if I got it at the cool off, but I had just this strong feeling that there was going to be higher upside that day, and I didn't know how fast it was going to come in. So I wanted to make a stronger, a quicker entry rather than being as concerned with relative IV at the time. And so I just bought it, and I bought 6 of them, which was not a crazy large amount to buy, but a few grand or something like that. Which was a good entry because like a half hour later it shot up to 1630, and then it hit 1680, and then it's been on this movement path ever since. But now yes, I could have sold when it hit the $20 level, waited for a cooldown, that type of a thing. But for these, I just want to just hang on to them for a couple of reasons. Number one, I want to add to the pressure in the stock. I want to add to that pressure on the options chain, even though that's farther out than I think is necessary. I think a lot of the pressure is going to come in March. It looks like March 18th or somewhere around there, I think, is where there's going to be a lot of pressure in the stock. So most of where I'm adding is like April or May with some farther out ones. But yeah, my entry there was just based purely on the fact that I felt like there was immediate higher upside coming, that there was a strong force behind it for this week. And again, that I think I talked about that spidey sense. There was a spidey sense going on at the time for when I felt there was something strong going on with the stock, and that it was a better entry than, say, back when it was 1338, and I'd have to watch it go all the way up and then go all the way down and kind of wrestle through that, which I might have to. It doesn't look like the most encouraging pattern right now, but that doesn't necessarily mean that I think it's going to ride all the way back down to like 12 or anything like that. So did that answer your question? That was a little rambly, sorry.
No, it absolutely did. I forgot that you're a wizard and you are gifted with spidey senses, so... It
wasn't like a rule-based thing. It was a pure... I felt like there was higher upside coming. It was a feel for it, and I've watched the stock just so much, sometimes I just get like a strong feeling about what's going on with it.
Yeah, absolutely.
What is, Nicholas, do you see a cup and handle forming on AMC on the 1 and 4 hour? Quentin, hello.
I have a question for you, John, after this one.
Yeah. Do I see a cup and handle? It looks more like a double bottom to me. Like that's the one side, that's the bottom, and there's the right side. And often with the double bottom with the right side, it does have a bit of a cool off because it pushed above the left side level, which is what you want to see. And now hopefully we get, because this was flat, so that's kind of a neutral double bottom. I mean, I'd be more encouraged if the right side was higher than the left, but still, it does look more like a double bottom with this potential to move up here if we have that momentum in the marketplace. But
I could almost see it turning into a cup and handle.
It could turn into a cup and handle, absolutely.
You know what I mean?
Absolutely, it could.
The double bottom would be the cup, and then if we retrace down, like that could be the handle. But yeah, I'm kind of with you.
And this also looks like an inverse head and shoulders. There's a shoulder head, very wonky shoulder that turned into a double bottom. So there's a lot of bullish patterns here. I don't know what this looks like just yet. This could be another double bottom, actually. This could be like the top, and there's the middle, and there's the other bottom, and then we go up here, and then we go up. That would be the most encouraging thing. We'll see how Monday goes.
Did you notice what trend line we rejected? We definitely rejected a bear shorted today on the trend from December 17th to the 27th.
Okay.
If you do a trend line there, I mean yeah. So there's definitely, we're not clear. There's no way that like.
No, we're not clear yet. I agree.
We have probably, until we break back into the 25 range, we're not really clear because the 22 resistance would be big too. I think the 25 range would probably send us up to the mid to high 40s pretty easily, because that's where you'll start to see anyone who's shorted from here, from the 30 levels. They're gonna have stop losses at some point, and if I'm them, I'm gonna have profit taken down here, and then I'm gonna put my stop loss up to the 22 mark, because that's the next major resistance. And if it goes through there, you'll get squeezed. So I could see that being a pretty big level, 22, 5.
Well, so the average age of shorts on loan for AMC is 71 days. So what does that put the price at here? 70. Whoop. 1. So right around $30 seems to be where a lot of the shorts got in. And that does like a little bit of sense here. It looks like just kept hammering it down, and this maneuver down here was just a straight, like, 45-degree angle sell down. So we're not out of the woods yet. I would like to see if we hold here and start to move up and retest this $21 level again. That could be an encouraging sign of a double bottom on Monday if we hold it. Which is, the markets being what they are right now, I'm not...
I think Monday will be absurdly bloody if we don't see SPY push back up to 444. Big money should be going after the put skew right now. It's so fat, if that makes sense, that they should be trying to drive the stock up to get the put skew, unless there's so much risk that they think there'll be way more downside next week. They won't want to go long here, right? So I'm honestly going to swing some puts if I don't see this pushback up above 441 before close, just because, again, that's shocking to me to see the put skew get this fat. I mean, I had 700% puts that are still 700 fucking percent.
That's crazy.
Right. To see it get that fat, you would just anticipate that the big money would try to go for that, especially with Max Payne sitting at 452. So, with that being said, I don't know what to think for Monday, but honestly, it's looking pretty grim.
It doesn't look great. I would agree. The fact that AMC has held up so well under this extraordinary downtrend pressure is interesting, though. As have most of the shorted stocks, actually. They went down, but they haven't, just collapsed. They didn't fall through a bunch of support levels, which is interesting. Yeah,
and they have been trading much more normal to the market compared to back in June. So, back in June, we saw much more of an inverse relationship. Obviously, it's not a true negative beta. But, it seemed like if the S&P was doing really well, then it wasn't so much the case for Gamer AMC, but vice versa.
Yes.
And now we've been seeing the opposite. The S&P has been dictating what Game and AMC will do, which makes sense, right? It's losing a little bit of its meminess. And that's because the meme price action has changed. But yeah, that's a crazy...
It could return. I mean, I think there's always people who'd be like, oh, I missed out on this last year, but maybe there's another opportunity now. The price is better. People might be looking... I think so too, and I think we're looking at a situation where people want to have a win in their portfolio, where everything seems like a loser right now, and with a large amount of retail support behind it again, there could be that type of a push. Now, I'm kind of curious, what kind of because we have earnings on March 3rd.
Oh, SPY's pushing up. SPY's pushing back up. That makes more sense. What kind of earnings? I don't think that'll be a major catalyst, honestly. I think it... But
something tends to happen around earnings, though. Again, what I was looking at in terms of, the window for where I think something major could happen is March 2nd to April 14th. And that's my...
Is that where your trend lines start to come together?
Those are where they all that's the peak zone for all of them, the 2 to 12 hour ones.
So the fact familiar, I think you should run through that real quick.
So I have a waveform model that I developed with a partner of mine, which I can't share for legalistic and proprietary reasons. But sorry, March 2nd to April 18th. But the basics of it, how it works, is that it looks at buying and selling pressure and accumulation versus oversold, overbought, that type of thing. Puts it into a formula and sort of outputs it in a readable way that allows me to make some forecasting decisions onto where that buying pressure, when it was at oversold levels, will go and when. So there's a lot. So when I say 2 to 12 hours, that's the different timelines. Like, it shows this buying pressure, just like everything else. You can look at different timelines, the 1 hour, the 10-minute, 5-minute, whatever, and you can make educated guesses as to when it's going to move over the course of a day, over the course of a week, sometimes over the course of a year. So it has a mixed history with AMC. It really does, more than a lot of other assets. There's a lot more wins with other assets than with AMC in terms of that. But what's a couple of things encouraging: the change in utilization, the seeming bottoming out of where the stock ended up, the new price action, and the fact that all of the crossover dates being when the selling pressure turns to buying pressure, which tends to be the weakest point of the stock, which is right around this area here, when it was very weak. I saw that, and I saw those crossovers happening. I was just like, between that, it looks like it's flattening. I think this might be a time to enter, and that's what drove me to enter on Tuesday morning. Beautiful. So, yeah, I wish I'd entered some other position on Tuesday morning. I didn't have enough money transferred into my one trading account to do that, but, so now I'm in this sort of, I would much rather have preferred if I got those Aprils down here when it was a lot cheaper. I think they were like 20 cents at the time. But I might get my wish. We'll see. Depending on what happens next week. I will say that. So that's where all of those the 2 to 12 hours. So there's uptrend waves on 2, 3, 4, 5, 6, 8, 10, 12, and they all sort of peak in this zone between March 2nd and April 18th. So now what could happen is I'll show you what happened with Lucid, which is...
When's their earnings, John? It is
their earnings on March 3rd.
Okay, so right after their earnings.
Yes, 100%.
Did you see SPY?
Damn it, I don't have the drawing here.
If I wasn't in this call, I would have alerted to enter calls there. I absolutely
let me take a look.
would have started taking that trade. You heard me talking about it. Like, it was
yeah.
To be below the 441 mark.
Yes, and there it goes.
When I'm completely thrown off by something, I plan for the next day. Like, okay, if we don't start pushing up, then we need to be in puts for next week because market makers aren't doing what they should be.
Yes.
And then the second I saw the confirmation, I was not saying anything because you were talking, but I was just nodding, that's my entry level. Is as soon as it curls over here, I would have just taken that call because again, puts are too overbought. It's too fat of a put skew, and that's just a quick scalp. But anyways, I'm sorry. I just
no. That was good insight into your trading style, what you were looking for, the put skew, that type of thing. This is useful information. By the way, quick announcement: we're still working out the paperwork, but I have officially joined JP's Discord as an admin and a partner. I will be posting some trades on there rather than just on Twitter. Some I'll post first, some of my swing trades, some of those things like that. I'm still going to be posting stuff on Twitter, talking about it here, but I'm also going to be posting alerts on there and becoming part of that community. And I'm really happy. He made me a very nice offer, and I'm happy to join him. I think it's a good community. It's a good bunch of good traders, and I think I can be a benefit to them, and I'm glad I can be. And so I just wanted to announce that, if that's okay with you.
Yeah, man. I was waiting for you to kind of jump in and say anything, but I saw you commented yesterday in the Discord, so I made a little post about it. And yesterday I did my hype post that Merc Trades was about to fuck shit up. I couldn't be happier.
Me too. I think we have a good. I think we have a long and storied future ahead of us.
Especially with Dax in there now. Dax is taking 40 trades a day. I take 4 or 5, and then you're gonna come in with these just super clean, kind of safer feeling trades, and all of us have our own style, and it's just proving to be super fruitful. So
Absolutely. It just depends on what people's style, what their desire is, and what type of trader they are. And see right there, look at BBIG. Like it hit that support level and it bounced right back off of that. It's moving up a little bit into close. That's good. So one thing I will say, AMC next week, max pain is 19. And then I thought it was actually 20, but I guess it's 19. I guess it changed. So then it's 18, and then 17, and then as we 15 on March 3rd, and then it's 25 for March 18th right now. So I'm intrigued. Like the max pain obviously is not in. It's so far. I mean, anything could change over the course of the week, but I feel like we have at least a good chance of holding this position right here into next week. Where are we at right now? We're at 1877. So we have beaten max pain. Let me double check. Did it stay? It stayed at 18 today, right? It's 18.
I am shocked that AMC stayed green today. Absolutely shocked. I thought it would be at least a 5% drop off.
Everybody. Again, this is one of those things where everybody's saying like, "No, I see all this downside. I see this and this," and I was like, I don't know. And it wasn't just wishful thinking on my part. I was just thinking to myself that there was all these large bullish bets that came in, pretty expensive bets for farther out in the money call options, and also these really expensive but conservative like $10 bets and like $9 bets, something like that, where they're buying cheap in the money calls a little farther out to sort of make sure that they don't go out of the money, but they also like can have the utility of that going up. So that's kind of interesting to me too. I don't know. The whole thing is interesting to me. I think that
it's a good thing that we didn't sell off. I was just very surprised.
It is a good thing.
And yeah, I did want to comment a little bit on your trading style here, and then see what you think. So honestly,
okay. Before you say that, let me get to a couple comments. Do you think April calls you got for 71 are still a good buy? It's a tricky situation right here because we're right at this sort of pivot point. If we do see further downside, those are going to go down pretty significantly. That's Vega. Yes. So it's if you were to make an entry today, it's the perfect time to. It's right before close. Yeah. So if you were to make an entry, personally, I would think of a smaller entry, and then you could always add to the position next week if you want to. Am I putting any bets before close? No, I want to see how things shake out on Monday. I don't have anything that I feel, AMC in terms of like conviction for that. I don't know where it's going. It's held up very well today, which is encouraging, and it is green, if barely. But as of the moment, no, I don't have anything. So sorry, go ahead, JP. What were you going to say about trading styles?
First off, I do have a question in here. Someone wants me to talk about OBV, but I think it's pretty useless. I don't know if you use it at all.
That much? Not really. I mean, I look at it as
right. It's like, oh, they haven't covered, but it's not really able to tell you a metric about like, hey, you should enter here or exit here, as far as I'm aware. So I don't know how to use OBV. Maybe it's just leave it at that rather than bashing it.
It can be interesting for confirmation of what you're looking for. Personally, I'm much more of a fan of the stochastic RSI, and I
started with that.
Stochastic's great. I also like CCI. It tends to move. Let's see here. Let's look at that on the 1 hour. It tends to have sometimes it can sort of foresignal what the direction is or what's going to happen before the RSI does. Not all the time, but sometimes. And so but mostly the stochastic RSI is the one I like, and we're moving towards, not quite yet, but we're moving towards overbought territory with AMC, and I think there might be a crossover on it soonish, maybe Monday or Tuesday. We'll see. But so I don't really use OBV that much, to answer your question.
Yeah, I just don't see a practical use for it. So yeah, that stems into my next question. So John, if you I have like half a second to pull up my screen. One of the things that I really want to get into with you is working on our own algo that's based on volatility.
Yes.
And your trend strength. So if you pull up my screen real quick, I pulled up your AMC call here.
Okay. Do you want to? Can you share your screen so that I can just see it in real time? Because otherwise, there's like a lag.
I don't know how, but Discord. Yeah.
Yeah, in Discord.
All
Let me
right.
see that real quick.
So
Okay, there we go.
on the right, here's the AMC call that you're in. On the bottom, here's the hot zone thing.
Yes.
And like if you're just looking, to scalp quick positions, it's fairly successful. Not on like a 5-minute, but on like a 30-minute. And you'll notice it hasn't put up a single long entry since its initial buying down here. But that stems into the RVI, right? If you look at where that initial entry zone lined up. Oh, I'm on SPY. That makes way more sense.
Yeah, you're on SPY.
I was like, where's it lining up? Right? It lines up, a little bit late, but it's still, I want to kind of get into how can we get our algos to capture this? Because it's such a simple trade, right? Just going from a low implied volatility state to a high implied volatility state and exiting. And it literally told you the bottom, right? It said, hey, like we're bottoming it out here at 2.6. The low it got to is 2.44, and then it ran to $6, right?
Yeah.
And that's going to be the same on almost any position as long as you get the trend right. So,
yes.
I guess my question to you is, do you think that we could come up with something like that for this?
I do think so. I'm working with someone who's much better at programming than I am, and trying to find like something that works within TradingView, which more people tends to use. And I think there's absolutely a way to find an algo that allows for better understanding of entries and exits.
Exactly.
And
we can change the time frames.
Yes.
Right, so
absolutely,
if you're looking for low implied volatility on like a 4-hour chart, and it oversold, you're gonna find much better swing entries. And if it's on like a 30-minute chart, you'll find great scalp entries. But these are still very common things. So I don't know. That's a little bit of a tangent. I apologize. It's just
no. I think finding good entries and exits is probably one of the more valuable things that we can offer people.
Everyone
and I think if there's an
right, they always ask not so much about the entries. The entries, right?
Exits, yes.
And how do you know? So today I sold my put that I bought at 1.4, and then I bought it at 1. I sold half at 1.4, and then I
there we go. That's it. That's the bell.
Right, and I put my stop loss to my entry, and then so let me pull up this put real quick. It was the 457, it was the 457. Holy shit! No, it was the 447. Okay, so 447. And if I go to my chart tab, I can pop it right into here. And here's what I want to show you. So if I'm going to a 1 minute, just to kind of zoom into the details, this is our entry, right? Our entry was at the low implied volatility state. So we actually got it at 1.0. The low of the day at that point was 0.94. So we're like 5% off the low. We entered while the relative volatility is low, and then people always ask me, how do I know when to trim? I put my stop or my sell order at 1.5. It didn't hit, and I knew to trim at 1.4. And the reason for this is I was looking at the relative volatility. Look what happens, right? Every time, if the relative volatility is high on a put or a call, then you know that the market makers are going to either consolidate, right, to crush the IV, or reverse to crush the IV. But they want that fucking premium, so they're going to go for it. So as soon as I did that, I trimmed half at 1.4, right? And then I put my stop loss to 1.0, my entry. It never hit. I actually thought it did hit, so I thought I was out of the trade, and I was like tweeting a little bit. And then I looked back, and the next thing, so the IV went from that high to the low, right? Stop loss still never hit, and it starts going high again. But this time, it's got more room to run. So the next trim, if you were in the Discord, was 1.9. And that's a beautiful 90% trade, right? And the same thing, the IV dropped. And now I'm only working with runners, so I'm not even worried about them. I ended up closing my last one out. I think it was like 5.5 or something, and they ended up going to 7. But it's just these very simple concepts of, look, if you buying a put or a call, you should always make sure that the relative volatility of that put or the call is low. Look at the pricing, right? It's going from $3.86 to $6. These are 100% moves in 12 minutes. And it's not rocket science to find these trades. It's actually very simple. You just have to understand the trend of the day. So first thing first, I noticed that, hey, we're either going 454 or 447 today. And that's my bearish or bullish gauge. If we go to 447, then I'm trading puts, right? So as soon as we hit the 447, you'll notice I started trading puts. And then at that point, that gives me my direction on the day. And now I'm waiting for that low IV. And this isn't changed at all. These are literally where we entered and where we exited. And it's strictly based on the main trend is going to be down, and then I'm looking for low IV states while the put skew, right, is low IV. That means, hey, market makers already profit took on all the puts they sold. Now now is a great time for us to buy to open the puts because the implied volatility is low. And then it runs all the way to the top. I mean, that's a 700% trade if you 800%.
Yeah, that was.
If you ran it from the start to finish. Obviously, I'm a big pussy. I never hold anything like that. Like, I'm half out of things before they're even 50%. But I did have a runner that hit 550%. And that's the beauty. But anyways, I'm rambling a little bit, but I do want to try to work together with you because I think that should be our next big goal is getting our own little algo out that that A, identifies the stocks you want to trade, and then B, helps you with your entries and your exits on the actual ticker. Because I'm not kidding. If you just sell the option when it's high IV, like, sure, you won't get the very top, but if you sold here at high IV, like, you made great money, and then if you entered again at low IV, you could do the same exact trade the entire day. And it's not rocket science, but I think it requires the understanding of what Theta Gang's trying to do. So Theta Gang has more money than Wall Street Bets, and they're always taking more money from them. They always win. So I think that should be our next move is getting that going.
I think that's a good solid. I agree with that. I think finding those right exits for people, for that is absolutely what we should be looking at. In terms of, like, for short squeeze plays, those are a little more volatile, a little different. Like with AMC, it took several days to get that big 100% move, which again, I don't know if that's going to repeat this time. I think that it's going to be more of like a jerky movements up and things like that. So now, for instance, I could have said, like, when we hit 100% on those June 20th, you could trim half, and then you know that you've and then everything else is gravy beyond that. If it goes up, goes down, or whatever. Right. I have a longer, better, like a better tolerance for the swings of those, and prefer just not to not, like, move around that middle area, especially when the stock has been volatile like it has. If I find a good entry, then I try to just hold on to it as best as I can, unless the stock gives me some reason to believe it's not a good entry anymore. And I do have stop losses on everything just in case, but they tend to be pretty conservative. So even if I didn't make as much money as I could have, I would rather, for me personally, with these longer trades, hold on to my good entry for longer rather than try to find the pivot points. But there is absolutely something to be said for these shorter trades. Like, you're looking at this on the 1 minute chart for these entries and exits.
Look at your $20 call that I pulled up. This is on the right, the AMC $20 June call. Yeah. 1 minute chart. You could have traded it based on the RVI today and taken it at 4.2 when it was at the low IV, and then sold it when it hit high IV at $6.08. And then not to enter again until it's low IV. And that was yesterday. I apologize for the confusion. Right. But that's okay. But look, it hit the low IV state yesterday, right before close at 4:30. Obviously, it's going to be higher than in the open because it's the underlying was higher, but you can see what I mean, that they started to consolidate the stock. And now when they're doing this, the Vega is going down. The implied volatility, the expected range is going way down. So option sellers are making money and option buyers are losing it. So you don't want to buy an option when you're going to lose money. If you're buying these calls at the top, right? So even for John's perspective, and he wouldn't do this because he's trades months and months out. But if I was going to enter a swing, I would absolutely scalp it to get onto the house.
Yes.
And, half the time I'll end up making less money than John on these longer term swings. but it fits my risk tolerance a little better. It makes me feel better about it.
Exactly.
And if you're stressing, you're not going to do well trading. That's the probably the biggest thing you need to know as a trader, right? If you're trading so much money that you're sweating, it's not going to be good for your health or your portfolio. So
absolutely,
just find a style. But yeah, I could definitely see these running to at least $20 a pop. And that would be if we hit 40, right? Because there won't be much intrinsic. And that's just about a 700% trade for John. From his $2 entry, it'd be actually closer to 1,000%.
Yeah, and because I had a higher conviction, it was longer out. I took a trade in which I felt like I could put more into it initially. Although I didn't put a lot again, I was transferring money into it. But the higher conviction you have for the longer out, and the safer the bet based on technical analysis and things like that, the more opportunity I feel like there is, because then I can feel more confident, like put like 10,000, 15,000 in something that's not going to play out for months really, and be confident in the swings going forward that I'm going to make money off of it.
Dude, yeah. I'm sorry. Did you? Yeah, absolutely. I completely agree with that. I'm reading the news cycles here. The White House warned we're going to war. It's going to be a war.
Yeah, that's what I was seeing. I
called it yesterday. Woo! Not about the
World War III.
I was right.
Yeah, that was the announcement. They said just get out. All American citizens get out of Ukraine.
And then Biden today said he's not going to evacuate the Americans. And if Russia invades, meaning like Russia, don't fuck with our citizens, right? Because
of course,
right.
It's such a tricky. Did you see that speech that Putin gave about nuclear war? Basically, if Ukraine, so he gave himself an out. He said war with Ukraine won't necessarily lead to if Ukraine tries to join NATO, that won't necessarily lead to nuclear war. But if Ukraine joins NATO and tries to retake Crimea, which is owned by Russia at this point, then there could be nuclear consequences to that, which seems like a lot of huffing and puffing, and starting World War III over that seems
Can you imagine
insane.
Another Cold War? Like, how stupid do humans have to be to ever even mention nukes? Like, guys, that's the end. Like, we're dead if there's too many.
Putin's fronting. He's got all this political baggage going on right now. He doesn't have the power and authority that he does have the power, but he's lost a lot of popularity, and he's trying to show Russia strong, powerful, all of that. Quentin says, "What's that top indicator? Which top indicator? The one that's right here. This, I guess you can't see my thing, but the one that's at the bottom, or which one are you talking about, Quentin? The one on the right, or the indicator that has all the lines in his thing on the top of that? What are your indicators? Do you want to go through a couple of them?
Sure. So this is one of my favorites on the bottom. It's called Hot Zones. It's a free study from Muse ThinkScript. It's only available on Thinkorswim. All it does is it takes the stock and it measures its oversold nature, so if it's RSI, and then it also measures its relative IV percentile. So what it's looking for is oversold stocks that are low IV. So, for instance, today, let me turn off extended hours just because it's not good for the indicator. Today we saw no buys. We haven't seen a buy on SPY since we saw our last buy was at 420.70. 425 was the last time this indicator said to buy, and that was back January 24th. Since then, obviously, it won't trigger because what changed? The implied volatility changed. It's too high of implied volatility. So similar to Sandy is in my Discord today saying that he wouldn't buy calls on SPY right now because the IV is so high. You're setting it's a seller's market. So this indicator is good for options traders. It's just showing you, hey, this stock is oversold and it's low IV. Now nothing's perfect, right? But when you're trading scalps like me, it doesn't need to be a sustained thing, right? If you take a 440 entry and it runs 448 like it does here, right? You've made your 100% on that trade plus some. So it doesn't matter that it sells off after you're already out. So that indicator is pretty cool. I like that one. It's free.
He says he's asking what's on the right. So that's just a view of an individual option on Thinkorswim, right?
So this is an option, and then the only indicator that I like to use with options is relative volatility index, the RVI. And the reason that I like that is options are priced same reason I want IV over here. If I'm selling options, I want to sell calls in a high IV state at resistance. I want to buy puts in a low IV state at resistance, right? So call implied volatility and put implied volatility is inversed. If there's a lot of money in the call skew, the IV for the calls will be high, and the puts will be low. So if that makes a little bit of sense, it's hard, I guess, to explain it in that manner. But Theta Gang is selling calls while they're selling their calls to open and then buying them to close. So when do you want to sell a call to open when you're bearish? When are you bearish? When you're at resistance and you think it'll go down. So they're selling calls there, and while they're doing that, the call skew is high IV, so you don't want to enter it. But let's look at SPY here on like a 30-minute, and then on the right side we'll oh, that makes more sense. It was from, yeah, okay. So if we're looking at SPY here, and I'll pull a 1 minute up on each chart just so you can see exactly what I'm saying. This is the relative volatility of the put. This is the, oh, I'm looking at the wrong thing. There we go. That makes more sense. So this is the relative volatility of the SPY 454 put trading today. We took it at, let me pull up the 447 put. It's a little easier because we'll have all our marks in it. So this is the relative volatility of the 447 put. Now, this is a lot of data because it's a 1 minute, but let's just look at the volatility compared to the price action today. So as I mentioned, the put volatility is going to be lowest when the stock's high at a resistance, right? So what happens, the stock, obviously morning IV is a little high to begin with, but you can see the stock as it starts to rise, right? So this, so as the stock starts to fall, the put pricing is rising and the put IV is rising. It topped out here, right? And as soon as it tops out, that to the market makers who sold those puts, right, they want to close them. So they're going to buy the puts, which alleviates the sell pressure. Now, as that happens, the stock will either consolidate, so it's in this high IV state. Don't fucking touch it. You don't want to buy a put when it's high IV. No. It's going to consolidate, and the stock's going to drive up or trade flat. And then what happens? The stock drove up, right? And the implied volatility of the put came way down. The price went from 1.5 down to 0.65. And then same thing. Now it's at this low IV state, and they're going to drive it back up. So the calls, if you're looking at a call now, would be in a high implied volatility. So market makers are now collecting the call skew. So as they're buying to close their calls, that is when you want to buy to open your put. And what you'll see is it lines up almost perfectly every time. So let's continue. As we get through the morning IV, I don't really trade before. This is the only trade I took. It was like a $500 risk. I made $20. I entered here I entered here actually, like at the worst possible entry. And then the stock did an ABC, so I stayed in it. Didn't hit my minus 50, but I got out as soon as I got down to here.
Gotcha.
So right, that's a horrible entry, and I did something you shouldn't do. You shouldn't buy a put while it's high IV, and you can see that on the right. But then the second trade we took was all the way down at 12 o'clock. And at that time, I was like, all right, this is a Friday. Market makers are going for premiums. Let's chill. So I hung out for a little bit, and then I started thinking about how they're going to collect the most premium, which is just the implied volatility. And then I started gauging, okay, we're on a serious downtrend today. Let's trade puts and look at the implied volatility. So super simple. This is relative volatility. You're going to want to enter options when they're low in volatility if they line up with your trend, and then sell them as they get to oversold on the relative volatility indicators. So 1.4 was our first exit. And so we entered here at 1.0, 1.4 was our first exit, and our stop loss on half of it goes right to your entry, right? Then it's a brainless trade. Like I took 40% on half of this trade. and the other half can go way the fuck higher. Sometimes I'll get stopped out. Most of the time, I will get stopped out on the other half. That's a fact. 5 out of 6 days, I get stopped out on my runners. But 1 out of 6 days, they go 500%, right? It's like, oh, shit. So that's how I balance my greed and fear. But yeah, same thing. So you put your stop to your entry after you trim, and then you wait for the IV to run again. And as soon as it starts to run to the top of the RVI indicator, that's when you know what's going to happen. The market makers are going to close their calls.
Right.
And that's when you want to close your put. Because they sold the calls, right? And if the puts are doing really well, then they're going to want to buy to close, or they sold to open their puts or calls. So if the puts are doing well, they're going to want to buy to close the calls, right? Because the calls will be doing horrible. And if you're inverse trade, you want to collect a lot of money at the front and then close it for little money. So
absolutely,
that's kind of how you would conceptualize the market makers and theta. So market makers, theta gang are like one and the same, and then how Wall Street Bets trades. Most of FinTwit likes to buy the opposite time that they should, if that makes sense.
Yes,
because it's counterintuitive. Wait, you wanna catch the knife? Yeah, absolutely. You want to buy things when they're low IV and sell them when they're high, because that's the game. The game is hey, make this look very pretty. Make this piece of shit, this pie, right? This pie looks delicious, but it's filled with shit. And that's what they're selling to Wall Street Bets, right? And Wall Street Bets takes a big bite, and they're like, fuck, tastes like shit, right? And they just lost 50% on their option. But in reality, Wall Street Bets should be taking a bite of the pie that looks like shit, because it's not, right? Yes. That's the good one.
Right.
So it's a little counterintuitive. I'm sorry to swear there.
So no. So is Thinkorswim, like, is that the only platform where you can see individual options? Because I don't think you can see it on TradingView.
I know that you can now on Webull, but I'm not
on Webull,
sure on TradingView yet.
I haven't seen individual options on TradingView. At least I'm not familiar with that enough. I just sort of although this is a very useful tool to like see the individual option pricing and entry and exit with relative volatility. I think if you're trading options, this is an excellent tool. If you don't want to like sort of go by, if you just want to see it as live as possible, especially if you're doing these short-term trades, this is an excellent thing to use for that.
Right. Or for instance, today, if I want to do a swing trade, I'm looking at John's AMC position. I know exactly the range it traded in and how much was at each volume. So there's almost no fucking volume today in that position. But the range was 4.4 to 5.15. So now just looking at it, I know that I don't really want to buy it close to 5.15. Someone else just got it for 440. So yeah, it's definitely nice, but not so nice for super long-term trades.
No, I agree with you. In fact, what did have the highest volume in terms of calls today? Let me look through here.
Probably the $20 call expiring today.
Well, yes. Aside from that, the $19 call was the highest volume, and then 20, and then 1950, and then 1850. What did we closed with 1850? So those got the juice. So let's see, where did we end up in terms of? We ended up with 45,000 in the money calls, 19,000 puts in the money. So the more skewed and heavily of calls this week in the money, because we did beat Max Payne by not quite $1, but over that 50-cent mark. So let's see. So what was I looking at here? Oh, the other options. So aside from this week, what does next week look like in terms of volume? $20 strike next week has gotten the most action, then 19, then 25, 30, 1950. But farther out calls is what I'm more interested in. Like in March, March, the $95 strike, which is just like a lotto. But $30, $50, and then $20 for March. Interestingly, the $20 March had zero open interest. For March 18th, had zero open interest, but today 3,000 contracts were bought for that.
That's huge.
That is a rather large, significant bet for conservative, but like for March 18th, which is not that far away.
Yeah, But then again, right? The same thing I always say is options are priced on the trajectory that the stock is trading on.
Yes.
It's a little bit fucking vertical still. So
It is.
yeah, it seems like it might not be the greatest time for major whales to enter, but when you see the stock start to hold up these prices today, and then the next thing you're thinking is, all right, so the reason we're waiting is we want to enter when the calls are low IV, just like we've been saying this whole video.
Right.
And we also want to enter when the big money is going to start buying the stock again. And at first,
100%.
right, that's at like the 16.5 range from yesterday, but today was bullish. So now, right, it's not going to be the 16.5 range to get the 68% or 61% retrace. It's actually going to be a little bit higher.
100%.
But the same thing is like that big money is looking for that same entry zone. They don't want to buy a stock at $440, when it was trading at $430 like 2 days before, right? They're smart. They wait. They're patient. So same thing for us. We just kind of wait. But as you're waiting, you have to realize that like what you're waiting for is going to change. So I'm waiting for that 16.5 yesterday. Today, now I'm waiting for something higher than the 16.5. Why? Because today was actually bullish.
Yes.
And big money is going to.
So that leads to my next question for you. What are you thinking in terms of where this is going? Because like SPY, are you anticipating a Bloody Monday with SPY?
Yeah, I am now. Just because the market makers didn't step back in here. Look at this fucking whale. Every day he makes the sickest trades. I love this guy.
Okay.
He trades 250,000 share blocks of SPY. And
okay.
I can almost call to a T when he's going to enter because it's always at a major pivot, at a fib pivot, and it's always counter trend. So I think he's theta gang. But today he sold 250,000 shares at $450.
Gotcha.
$449.26, and he just closed it out. That's a huge gain.
That's a big gain for sure.
Yeah, that's like a few $1 million gain there. But he does it every day, and he's
That's
just
crazy.
An excellent trader. And it's pivotal. You'll notice, like, if you catch him entering, you don't always know which way he's trying to trade, but it always has a prominent effect on the underlying. So I don't think it's like a balancing thing. No, I think this is a trader with that much money. One day.
Eventually.
One day,
eventually.
Yes.
Maybe for a lot of us who, if we all get some of these big trades and
pool
get
together
some good money off of them. Yeah, exactly. There we go. Something like that. Yes. So let's go ahead.
I've seen him go up to 1 million shares in SPY a day. It's
wow.
Yeah. So he's
That's
trading
commitment.
on margin, obviously, but he's probably sitting on 40 million easy.
Oh yeah, for sure, absolutely. So let's talk about what you think for AMC on Monday, because it did hold up very nicely today. I am pleasantly surprised. It held up. It stayed in my let me move this back out of here. It stayed in my little box zone here. It didn't go below it, and it kind of held there. Now, it looks like it could be making something that could like flop over, but on the other hand, it could also be making, again, it looks like it could be a very wonky flag pattern right here. And if it does hold up on Monday, then it'll I think we have a good opportunity to move back and retest 21.
Yeah, I could definitely see that. The major
it's going to be hard. It's going to be hard if SPY dumps heavily on Monday.
Exactly
of course.
What I was going to say. It is. If SPY loses another 20 points, does AMC hold up? I don't think so.
No, I don't think so. I think everything's going to like trade very sourly on Monday in that case.
If that's the case, exactly. So I guess
yeah.
I can't really answer that because I think my answer's too contingent upon what happens with the entirety of the Nasdaq and S&P come Monday.
Yeah. Do you mostly trade SPY calls? I see most of your entries and exits are SPY.
95% of my trades are SPY.
Is that just because it's a lot more consistent than most other things in the market?
Yeah, it's the ease of access and consistency. If I'm trading other tickers, I have to do a lot of research. If I'm trading SPY, I just have to comprehend market sentiment on a macro scale. So I don't have to, look into the 10Ks or all these different things for these individual tickers to try to gauge, what's going to happen with them. No, it's the conjunction of all of the market, and that's easier for me to comprehend. So while the implied volatility is this high, I only am trading SPY. It's too easy to catch these big gains, right, on very little amounts of money, and it's just too consistent. I don't think I had a red trade this week. Don't get me wrong, some of them went red. But
after you had already been profitable on them.
Oh no, they never hit my stops.
Oh,
right. So
they never hit your stops. Gotcha.
The initial direction might be red, but if it's not hitting my stops, like I'm good. Like I'm happy.
Oh, I gotcha. So they went red briefly,
and then green. You're right.
And then green. Gotcha. Okay.
It's not like the most easy thing in the world. No, but you can be pretty goddamn consistent on SPY with
absolutely
very minimal work. Whereas if you're trading individual tickers like JPA does, he's putting in like at least an hour of research every night on these
100%,
tickets, right? And like
100%.
Props to him. Look at it. He's fucking on a 30
He's been killing it.
Right.
He's been killing it.
He's been killing it. But like I also have been killing it to a lesser extent. That I feel like my workload is much easier, right? So that's kind of why I'm only trading SPY right now. It's just too easy and too consistent. Now when the VIX drops back to 15, then you're not getting these returns on SPY, right? It's just like, hey, buy the VWAP dip, right? That's what you get. And it's like a 20-30% call scalp. But if the VIX is low, then you start to look at these other tickers and you start to find other trades because you want to compensate for that lack of activity. But until that happens, I don't think I'll trade anything but SPY.
Right, I gotcha.
It's so easy.
Do you what do you tend to use in terms of for your style? How much do you bet per trade in terms of it varies obviously, but just in a general sense?
I haven't spent more than 5K a day this whole week. And back in 2021, it was very rare if I spent less than 25K in a day. Mm-hmm. So it's more so based on my convictions. I don't know how many times I can stress this, but like anyone who's telling you they know what's gonna happen on SPY in this correction from here there's so many different possibilities on where SPY can go. It is such a low conviction spot to be trading in this no man's land. So I'm not going to spend, a substantial amount of money on trades. I'm going to trade very light. And then as we leave this correction, right, whether it be in a bear market, or in a bullish pushback up, then I'll be comfortable to start trading heavy again and get back up towards that 25K a day risk. I never go above that because, if I risk more than that, then I lose sleep. And I don't like that.
No, I'm with you on that.
Plus,
so go ahead.
Plus, I'm not having a hard time hitting 1K to 5K a day on 25K risk. So,
which is great. That's a great return.
Right. It's my profit goal is always 25. Is always 5K a day, but I hit that maybe like 1 day a week.
See, it's interesting because I try to risk between 10 to 20,000 to get a few 100,000 on a long-term trade over the course of months. Whereas you sort of churn like 25K at a time or something close to that to get 1,000, 2,000 a day on those sort of daily basis. It's a very interesting difference in sort of trading styles.
Right, and yours is probably safer and more consistent. And that's the honest truth, right? If you look at Unusual Whales, just did a cool little video with one of their analysts, Dan Wagner. He was talking about he's like a numbers guy, so he looks at things from the analytical side from the data. And he was looking at which plays have the most success. And if you're looking at all of the Unusual Whales options, the ones that hit I think it was a minimum of 30% green without going over 20% red were all over 120 days to expiration. So even from an analytical standpoint, you can see that the expected range falls off a little bit for market makers after, that 3-month mark. So it's a little bit easier to be the call buyer making your money. And that's safer. But for me, I kind of enjoy the rush. And
1 second, guys. Sorry, keep going.
And it's
my cat knocked over my green screen.
It's just been really fun. John, I gotta run in a minute here. What else did you want to run over?
I think that's about it, and it's the end of the day, and it's Friday, so let's just call it for where we are now. I think we had a good conversation. I think we had a good day. My cat is destroying my green screen, so I'm gonna have to leave anyway. But I wanted to thank you for coming. Please join the Discord channel, Merc-Trade's Discord channel. It's on his Twitter. I don't think I put it in the video description. I'll have to edit it. But I want to thank you for joining me.
John, I can't stress how happy everyone is to have you that I've talked to. And personally, there's no other swing trader that I'd rather have. It's just blown my mind. For anyone who doesn't know, John and I used to chat a heck of a lot back in the JB days.
Yes, the JB days.
And it's just... it's blown my mind the consistency John has with these longer term swings, and not only consistency but like the timeliness of them. Super pleased to have you, man. And again, for anyone who isn't aware, almost everything in the Discord is free, and that's kind of the way that I think we both like it. So if you haven't checked it out, please do. There's lots of educational content. We're up to three very consistent traders with very different styles, and I think that you could learn a lot.
Absolutely, and I'm glad to be there. I'm happy to be a part of the community, and I'm excited to trade with you guys and to be there. And I'm so flattered that you asked me on in the first place. But
Dude,
so I'm gonna. Sorry, go ahead.
The thing I'm most excited for is you breaking into the educational stuff. Obviously, as a swing trader, most of your time, like I say this all the time, I'm bored 90% of the day, and I scalp. Like as a swing trader, it's going to be very similar. But even more
absolutely.
So. And what I think I'm most interested in is seeing where you go, whether you do like a A through Z option series, whether we do weekly podcasts and let Discord members come and do question and answers. I think
it'll just it'll just evolve naturally over time to what people want to see, what people are interested in, and what's the most valuable insight that can be given to people, both the free and the paid membership. But please do join the Discord. JP, I'm gonna let you go, and then I'm gonna do my outro for the stream. Thank you again for joining, and I look forward to talking with you next week as well.
Yeah, man, can't wait. Have a wonderful weekend, and tell your